Hello, and welcome to the next installment in our In Conversation webinar series. Today, we will be covering a variety of topics around the financial impact of COVID-19 and the travel industry. I'm your host, Janet Baptist, Customer Retention of FCM Americas, and I'm pleased to be joined by several of my colleagues from across the globe. Josh Robig, Vice President of Corporate Finance USA, Timothy Williams, Chief Financial Officer of Asia, Michael Simon, Chief Financial Officer of Australia, and Adam Murray, Chief Financial Officer of EMEA. Before we get started, I would like to thank those who have submitted questions in advance. We have worked to incorporate many of those into our discussion today, and we'll be highlighting a few towards the close of our session. Now, I would like to welcome my panel. Welcome. Let's start by looking at regional insight. What have you experienced in your market, and what type of indicators are you looking for that may signify a return to travel? Let's start with you, Mike. Tim.
Yeah, not a problem. Thanks, Janet. Look, I think we all know that China was the first hit country with this, followed closely by Japan, Korea, the Philippines. So Asia as a whole, really was the first wave of what we saw as this eventually reached out to be a global pandemic. As restrictions tightened, so did our business, and like so many, everyone had to react. So FCM, like many, had to navigate through a rapidly changing situation. This included, canceling of flights, refunding, rerouting people, connecting people to get home to their loved ones. But no one was going to make this. No one was going to get this 100% perfect. But I think, through our customer-centric approach, high-touch service, it really allowed us to repatriate and get everybody where they wanted, and to work with clients to get what they needed. So where are we today? So today we're left with a very evolving situation. Obviously, we went into this very quickly, but coming out of it is going to be much, much slower than anything we initially expected, or anything that we've been hoping for, I would say. The bright spot by far is China. I think in China, we've seen recovery in our domestic travel market. I think we're around about the 50% mark as of last Friday. We're continuing to see strong growth in that market, especially as travelers become much more confident. Our other markets, however, will take time. And I think that's really going to be very reliant on government bilateral agreements. Markets without any domestic footprint, like Singapore, for example, which is a 100% international travel market, significant long-haul traffic. We don't expect to see recovery for quite some time, unless, again, those bilateral agreements are put in place, and there is a lot of talk of that around the world. So the first sign to a return of travel is obviously by far is the lifting of restrictions by governments. The bilateral agreements coming into place, these green corridors that everybody's been talking about. Second, very quickly and followed by this, is consumer confidence. And I think in China we saw that with the lifting of restrictions, there is a time lag between the lifting of restrictions, that confidence just going outside, and then the confidence to think about coming back to business and reacting and starting to travel. So business globally needs to stabilize first, and this will take time. Governments who have the means to stimulate recovery domestically first will also be able to then look at mechanisms and how they promote and develop international trade and markets. If we look at things like manufacturing and supply chain growth, they're good, strong signs for economic growth, but we also need to be careful on that, because as we've seen in China, and there was a number of articles around this, there was very strong growth in manufacturing. However, one of the challenges they have is they don't actually physically have buyers at the moment. And so I think as we start to see more of that evolve, we need to be very careful in thinking about, what are true signs of that recovery versus what are those sort of short signs that potentially could be misleading.
Great. Mike, are you seeing the same coming down to Australia region?
Yeah, we are. I think Timothy's hit the nail on the head. Well, from our side, we've seen obviously domestic travel shut down entirely. When I say entirely, though, we still have a little bit of sales going through. I think we're down 98% across the region in terms of sales for domestic. But our corporate business, funny enough, is actually still ticking over. We're still seeing strong mining companies still flying, although they're not necessarily flying on scheduled flights with Qantas or not Virgin anymore. But with Qantas, they're actually booking a lot of charters outside the scheduled carriers. And our corporate business at this stage is still booking is fairly healthy at about 15% up. Or sorry, it's not 15% up, 85% down. We call it 15% up. But signs for us in terms of a recovery, very similar to what Tim was saying. We are following China and other countries. We're about two weeks behind, 2 to 3 weeks behind, so or lag from the other countries. And when so we track that. We're also looking not necessarily just at other countries. We do look at our suppliers. And we're starting to see now in Australia, the suppliers like Qantas, for instance, are starting to put flights on from July onwards, and that's a good sign in terms of recovery. And then obviously, from an Australian perspective in particular, our internal borders in between our states, we've seen a number of our premiers and statesmen saying that they'll open up domestic travel from about July onwards. So that's a good sign for domestic travel, not necessarily any signs yet for international travel, but yeah, it hasn't been easy.
That's great. Adam, moving over in the natural progression of the world into your region, how did you start to see things affect your business, and what are you looking for recovery?
Yeah, I think we're just slightly further behind yet again that natural curve that we're seeing. But we've been in a situation now where it is pretty much a complete lockdown from an international and domestic situation. Although we are now starting to see that, as Mike's mentioned, we've got certain carriers who are putting on flights, and some of these graphs talk to this. You see capacity coming back into the marketplace. Although we need to temper, I think, some of that optimism in that we're still going to be very much dictated by governments and their quarantine rules. So the UK has stipulated a 14-day isolation rule for anyone returning back to the UK. So that makes short trips pretty much nigh on impossible from a practical sense. So that is a little bit of a concern, but we're definitely seeing capacity going into the market. And we're also seeing a lot of mainland European destinations wanting to open up. So people, to some degree, are getting quite excited about the idea of actually enjoying some summer holidays this year, which I think a few weeks ago was probably completely dismissed. But again, some of these quarantine rules, until we start opening up, as Tim talks to around bilateral agreements, I think there's still also going to be a certain amount of consumer nervousness as well around that. So I think it'll be slow. I think for Europe, and especially the UK as a whole, so much of our business and our activity is international travel. So we would expect to see, like everyone else, domestic returning quicker. But I don't think that will have such a big an impact on, if I look at our business compared to, say, domestic travel for Mike in Australia. But there are pleasing signs coming now, which is great. And it's great to see that the industry at large is making movement and is taking steps. And I think the more we see that, the more it will open up, and it'll be a faster route to recovery for all of us.
Great. And Josh.
Yeah, thanks, Janet. Yeah, the US has been, very similar to Tim, Mike, and Adam, how they said their regions. We obviously, it was a very evolving situation where we had China travel shut down very quickly, Italy travel shut down, and we were working very quickly with that evolving situation. And to the point now, as we're all saying, where we're in pretty much complete lockdown, but we're a little bit different to the other regions. US being such a powerhouse in the corporate space, our domestic is 70 to 80% of our travel. So I think as we start to see travel come back, we are going to start seeing people travel more domestically, and thinking about obviously international travel, but it's very industry specific. We still haven't seen oil and gas, shut down. Our oil and gas customers are traveling still. Our construction companies are traveling, and they might just be traveling in a different way. So some of them are jumping in a car and doing, hotel stays. So we're still seeing strong land sales as an example. But in general, I think we're gonna lag the other guys a little bit, but we're gonna see the same trends coming through.
Great. Well, thank you for that. Switching gears a bit, we're going to talk about a big buzz topic in the industry right now, and that is with all of these cancellations, what are the airlines doing to potentially credit back some portion of those lost funds that have already been attributed to budgets and such? What can we do? What are we seeing? And what would you recommend to the buyer being our customer? So Josh, do you want to go ahead and get started, as I know this is a big topic in your region?
Yeah, sure. So the US is, and I think globally, but specifically in the US, we've definitely created what we're calling like a task force, both in our leisure and our corporate businesses to really tackle this situation. We've got people in operations, people in product, people in finance working cohesively with our suppliers as well to ensure that we're doing the best. But as you know, our suppliers are hurting, the industry's hurting in general. So it's been an evolving situation as to what each supplier is doing in this space. Whether they are refunding, and there was periods there where they were refunding straight away, and then they started restricting it and stopping it. So we've seen very recently that a lot of sorry, I've lost a little bit of my train of thought there, but I'll pass it on. Sorry.
Great. So what about over in the European region, Adam? Are you seeing something different with the suppliers?
We are, to Josh's point, I mean, we definitely, this is probably our number one priority, is securing refunds for our customers. And we've seen varying responses from suppliers. I have to say, in the main, our suppliers they've been inundated with volumes, and I think operationally they're challenged. That's fair to say. So I don't think it's an unwillingness to provide refunds necessarily, but from a practical point of view, they are finding it quite challenging. So we've ramped up our resources to help with that. We do continue to work with some of the trade bodies here, especially in the UK, whether that's CA or ABTA, around what we can do collectively to get funds flowing, which we've had some progress on. But I appreciate that for a lot of customers, this is an incredibly frustrating time for them. And one of the key things that has come to light and really struck us from a corporate point of view is where airlines are not actually providing cash refunds, but providing credits or the ability to transfer bookings, is from a corporate perspective, it won't necessarily be the same individuals that will need to fly in the future. Lots of our customers are restructuring, reorganizing. Things will move on, and I think finding a generic way of being able to utilize credits is a key part for our corporate businesses. I'm not sure if you've seen that as well, Josh, in the States.
Yes, we definitely have. As much as possible, they're trying to hold credits, but where possible, we're working as hard as possible to get these cash refunds back to our customers as quickly as possible. It's just been difficult airline by airline, right? So the big three here are definitely passing it back, but then you've got other carriers where we're using our negotiating power with the suppliers on behalf of our customers to ensure we're getting those funds back. But it's just a bit of a slower process, and as you said, Adam, that creates frustration for customers because we might be applying for that refund when that ticket was cancelled, and 2-3 months later we haven't seen those refunds coming back, and so we're trying to really make sure customers are aware that we are acting on your behalf. We are trying to get these, this cash back to you, but it is difficult because we've also got, fiscal responsibility to our company where we don't want to be, passing funds back where we don't actually have the funds. So it has been a little bit of a tricky, let's call it a bit of a minefield to navigate for all of us, I think. But, we are working actively and on behalf of our customers to do the best we can to ensure, that we have the best outcome.
I think, Josh, though, a lot of it also is education for our customers, to be able for the customer to understand also that we are the agents and we don't have the cash. And I think that's, from an Australian perspective, we spend, to Adam's point also, it's our number one priority, and just educating the customer, because the customer obviously has a perception that, well, booked through Flight Centre, and wants Flight Centre to pay them the money. We obviously, if we don't have it, to your point, if we don't have the cash, we can't give the money back. But I think what a good outcome here has been is that and this just shows the benefit of our model and booking through a sustainable and reliable travel agent like Flight Centre or Corporate Travel or FCM, is that we do have the capacity to fight and to get the refunds back from the airlines in most cases, unless obviously they're pushing credits. Whereas if you were just an individual and you'd booked online and you'd done it yourself, you'd be having to go to the suppliers yourself to try and get that money back. And it is, and as Adam said, they've got a huge amount of backlog, and you just become a number in a queue trying to get your money back with the rest of the thousands. So I think that certainly does say a lot for our business.
Yeah, absolutely. Being the advocate has become quite important for us during this period of time. Tim, I know you were sharing a bit about, how China handled this originally. It was a little unique at the time, I believe. You want to talk a bit about that since it hit you first?
Yeah, I think exactly what Adam, Josh and Mike have been saying. I mean, I think communication is a big thing here, and this is something that we did a lot of from a China perspective. But you have to be realistic here, especially markets that have domestic, because they've got the sheer amount of volume associated with domestic travel means that, for the airlines, they've also got to be able to cope with that. The other thing that I think, definitely in the UK, definitely in the EU, I will say, UK, places where you've got strong regulatory environments, and the requirements are that you have certain obligations that you have to meet. Now, this is a unique situation where it almost goes above and beyond that, and I think Adam actually touched on it a little bit before, but we also have to remember that even from an airline perspective, a lot of those airlines have had to furlough employees. And so they don't even have the same capacity from an employee count to actually be able to generate these refunds for people. And so credits is obviously an option there. I think there's a few things which, and this is where, Mike touched on the benefits of a travel agency and a trusted one. The reality is that we have the ability to communicate with different parties. We have the ability to communicate and educate to our customers in the end, to help them better understand the situation. And I think there's, the usage of credits is one thing. I think one of the things airlines will need to be a little bit cautious of as we sort of come out of this is, and I know we will potentially touch on this later, is the cost of, what happens with the cost of air tickets in the future, and how do those credits get applied? Are the tickets 5 times more expensive than they were, and the credit only covers 1/5 of what they used to? And so there's a lot of things that, to be honest, I would say are being talked about that need to be addressed further down the line. But I think generally that it all comes back to the main thing. I think the communication aspect back to the client is probably the key thing at this point in time.
So I think it's fair to say this is new for all of us, airlines and GDS is included, but we are working on the ground with the right subject matter experts and our partners to make sure we're fighting on behalf of our customer and getting the right outcome. Yeah, great. All right, so switching gears again, we have hopefully a good amount of our customers watching this, and maybe some CFOs amongst them. So as peer CFOs, can we talk a little bit about what you've been doing yourself within our business, and what advice we may pass along to our customers, what they could be doing right now to review their travel spend and be better suited for coming out of this? Adam, do you want to go ahead and get started?
Yeah, sure. So, and a lot of this won't really come as a surprise, especially to anyone in the finance community. But right from the get-go, the #1 priority for us as a business was to really understand our cash runway in an environment where we're seeing almost no income whatsoever. Just really understanding the rate of cash burn was an absolute priority for us. So that was the first thing, and at the same time, turning off all discretionary spend, which we were able to do relatively easily. And then for us as a group, it was really about how do we, in a time of absolute uncertainty, and I know we looked at the graphs earlier and we constantly talk about where are we at on the curve, and have we passed the peak? We don't really know where this is going to finish. And for us as a group, our priority then shifted to how do we secure a cash runway for circa 18 months. That was the sort of assumption we had to. Our number one priority was to maintain that sustainability. So that's what led to some of the capital raise we did out of Brisbane, and extending some of our credit facilities. So for a group, we're able to communicate to all our stakeholders, and especially our customers, that we have funding in place for a runway of around 18 months. And I would imagine that's a priority for most companies to lock in that cash runway as quickly as possible. And then as we've moved from that, it's about starting to reimagine our business. As we work through a period of hibernation where we've got very little trade, our focus shifts to reimagining what our business can look like as we come out of hibernation, and then which parts of our business do we prioritize to come back. So those would be all the traditional metrics around profitability, ability to generate cash, those functions which provide the best return. And we have definitely done that across all of our brands. And I'm sure it's a sort of exercise that most CFOs will have been heavily involved in, continually modeling various scenarios. And I would probably guess that most CFOs have taken a very conservative approach in their planning because of the level of uncertainty. And I think I will constantly come back to having to plan for this high levels of uncertainty. None of us can base our plans around hopeful returns, latching onto green shoots and hoping for the best. We have to really be locked away with some certainty around how we're going to move forward. But I would imagine that's what we've seen across the group, and I know some of the other guys will be able to talk to that. But I would expect most businesses to have gone through a similar plan.
Mike, you're very close to it all in the heart, being in Australia, our home country. So I'm sure you've had quite a few discussions with our senior leadership team and can probably share some great advice.
Yeah, Adam's explained it fairly well in terms of how we as an organization had to move into hibernation phase, and we had to move into that very quickly. And with that has come some really tough decisions, and we've had to across the various regions stand people down and shrink to a workforce that is really just a shell that can keep the lights on. I think though what it has done for us as an organization, and certainly what we're talking about in Brisbane and with our senior leaders, is that's given us an incredible opportunity to reshape and rebuild our business into even a bigger and better business. We've managed to, we're looking at old habits, old models that we've and legacy models that we've always wanted to change, always wanted to move, and we knew that it would take a large amount of effort to do. Here we have an opportunity where we've basically come down to a grinding halt, and we can rebuild rebuild this business. So when Adam's talking about the reimagine phase, it's incredibly invigorating to be in this position, and we're fortunate enough to be able to rebuild and as I say, come out stronger. But it's not just going to be, and I think this is quite critical, it's not just going to go from hibernation into rebuild into this new world. There's going to be a long transition period. It's going to take us some time to get there, and we as a management team and CFOs alike need to be extra mindful in terms of how we come out of hibernation, and we just don't go back to our old ways and start spending money and forming to what we used to know and what we used to do. It's going to be entirely a different world going forward, and I think this transition period is, to Adam's point, it's probably going to be 12 to 18 months before we genuinely come back. So we see in here in Brisbane as an exceptional opportunity, and we're very excited about it actually, to get rebuilding.
Yeah, that's great advice. I think all of us need to take this as a lesson of what's positive from where we're at and what was positive before and what the new positive will be, and bring it all together to hopefully be in a better position for us. Tim and Josh, anything additional from your areas?
Yeah, I think I think Mike actually nailed it right at the end there. I mean, I think for us, it's we're now moving into this stage where let's be honest, most people, if you haven't gone into the stage of understanding your business and starting to rationalize what you needed to do at this point in time, you're a little bit, if not a fair bit behind the 8 ball. Now's the time to start thinking about where do you go, how do you come out of this eventually and do it in a smart way, and then how do you start to capture opportunities as you move forward. And we also have to understand not every single industry is in the same situation. There are industries that aren't, obviously aren't hurting as much as others, but generally, I mean, when you look at travel and travel as a means to really ignite commercial growth for you as a company, I mean, that doesn't exist, right? I mean, it doesn't exist today, and so people have to be smart about other things. But I think one of the things I just really wanted to touch on here is, now is the time for leadership. CFOs are a part of leadership teams, and the fact is now is the time to be brave. It's to make the calls that have to be made. It's to understand the things that probably didn't always sit at the top of the pile, and now is that time to be looking at those and making those decisions that need to happen. And so I think doing that now is the best time, because I won't say very quickly, but we are going to come out of this economically. The world is going to come out of this, and at that point in time, there's going to be a lot of noise and a lot of opportunities that people will start focusing on, and we can miss the opportunity. So now is a great time to be excited about the future, but also to take decisions that need to be taken today.
That's great. Yeah, Josh, what does the future look like for the US?
One thing I'll add as well, obviously, we all touched on it. Fiscal responsibility and cash management is key, and I think all CFOs would have gone through this exercise with the downturn we've seen. But with this reimagining, we are 100% investing in areas where as Mike said, to build off. We've got this opportunity to basically reimagine, start from scratch almost in a way, like zero-based budgeting is finance term. And so thinking about where have we where can we improve for our customers? What can we invest in? Data's going to be, everyone talks about how data's key, but data's going to be more key coming out of this for our customers. So we're heavily invested in the corporate space right now in analytics and dashboards for our customers, so they can start thinking about what this looks like as it comes back, what countries are coming back online, what government restrictions, and putting that in a way where we, I know in the FCM space we have a new dashboard out as an example that we're really pushing that investment across the group, as well as. But one other point I just wanted to make was around supply negotiations as well, both internal and for our customers. We've definitely all gone through that, but we're also thinking about that now, specifically with our airline partners and our hotel partners. That's something that we're working heavily on to ensure we're getting the best rates for our customers into the future.
So Josh, I just realized you said $1 million word, and that's data. And I have to give kudos to this group for a group of financial individuals that we went about a half an hour without actually talking about data. So it shows what a big topic that this is. And I think it is people first, and even up at the upper levels and in the financial layers, you've talked a lot about that aspect of the people. So yeah,
I was just impressed that Josh threw in zero-based budgeting there. So
yeah, that's pretty good. That's pretty impressive.
So now shifting into what we could say is probably an impossible feat for any of us, but if you have the answer to this question, I think you could probably come out of this pretty well. But what does travel look like in the future? What's your prediction of how things could change from the business perspective, but also from the traveler experience perspective? It's a big topic, but I'm sure you all have some thoughts. And then what do we have at the Flight Center side that may help support our customers, into this new world? Josh, do you want to start with that one?
Yeah, tough one, right? What do we imagine the world to look like? Look, I think we're definitely going to see some nervousness initially with travel. Coming back, I think a lot of things right now focusing around having maybe interim travel policies versus your regular travel policy, and it's going to very much focus on duty of care and safety. So it's really going to be, I think, heavily dependent, if we're thinking international travel, on what governments and are doing and allowing, and what the trend looks like in terms of how this virus is being handled. I also think as well, it's going to come down to what our suppliers are doing. So, right now, airlines, hotels are coming out with all their, different things they're working on, whether it be no middle seat, moving passengers around. It's going to be, very focused on that. But in terms of, what we see, we're definitely going to see domestic travel, obviously, pick back up pretty quickly. So I think we're going to see that come on first.
Tim, starting to see things open, are you seeing some of these predictions already happening?
Yeah, look, obviously, I mean, the biggest one by far is the duty of care and the traveller safety that Josh spoke about by far. And I think it's really about, look, there's a lot of different factors that go with this, and I think that's going to definitely be by far the biggest one. I think this is where technology really comes into play, and I mean, I talk from an FCM perspective, but if we talk about from an FCTG perspective, the reality is that we have a great suite of technology products. We're developing new ones. We've invested heavily in that, and that's really going to help around the traveller safety, around the awareness for travellers. So for travellers, what's actually happening? What's happening today? What are the latest alerts that we're getting? How do I know that my end-to-end trip experience is going to be seamless? But look, just from a prediction perspective, I think there's a couple of things which are key here. The speed of travel. So if you think about the average airport time, you've got to be there 1 to 2 hours before a flight. At the back end, you're somewhere between 30 and 60 minutes in the airport. What happens if that becomes 4 hours at the front and 90 minutes at the back? So then one-stop trips become less popular. So direct is obviously much more becomes much more viable for the business traveller, for example. It's how do you work with airports? How do you think creatively to try and circumvent that and reduce the time? So I think those are some of the things that are going to be very key, because obviously business travellers don't want to spend 5 hours in an airport. What are governments doing? And I think one of the key things, which I have heard this from a couple of clients already, but what is the past track record of those existing clients in the current situation, and what do they want to think about? And then you kind of move into some of the things people probably don't think about. For example, does the travel insurance cover my travellers? And so if not, what is the potential financial risk for the company if they have someone who goes on a business trip, they get sick on the way there, and then they're stuck in that country at the time? So I think there's a lot of factors that need to be thought about here, and I think that's where the whole duty of care piece is going to be at the forefront of everybody, because I think the other pieces will start to look after themselves. The only other one which I just want to touch on is a lot of people talk about, and you see a lot of different opinions around what's going to happen between things like is this the death of business class versus economy and so forth, and I just don't see that happening personally. I think the reality is that while some companies might look to adjust programs in the short term, the reality is a lot of these have other factors at play, and that can relate to hiring top talent and what is the expectation of the type of talent that you're hiring and being an appealing employer. And so I think a lot of that will actually balance out some of these things that we're hearing at this current point in time.
Yeah.
So just to add into that, Tim, I think when you talk about the airport duration, I reckon, and I might be wrong on this, but I reckon it's going to be very similar to what we saw in the 9/11 days, where security was ramped up, and there was this hype around the airports, and as you said, you had to get there 2 or 3 or 4 hours before to travel. But I can't see that being a sustainable airport experience. It will probably be there for some period of time. I agree with you. I think we will. It will be a longer period that you have to pre-check in but 12 to 18 months out, I think we'll start to see the airports having to lift restrictions in terms of how long that takes. It's in no one's interest to try and make that journey any longer. The airports will try and push the customers and through. The other thing that I think that also is quite important, which you mentioned from a insurance perspective for the actual trip, but I think it just, once again, I mentioned it earlier in terms of the value of a travel agent. I think for CFOs and businesses going forward, who you choose as your travel provider becomes even more important. You know, having a sustainable travel partner like FCM or Corporate Traveller, where we have a strong financial standing that is going to still be around even in the tough times. I mean, this is the worst pandemic to hit the world globally, economically, ever, and we're still going to survive it. So I think you know, selecting your travel partner is going to be even more important for customers, as well as who your suppliers are going to be. There's a lot of airlines and hotels that haven't made it through this crisis. We've got one in Australia alone, Virgin, who's struggling. We've seen SAA in South Africa. We've seen Mauritius Air. We've seen Thai Airways. You know, there's a lot of suppliers that are struggling, and I think the way and how we select who we partner with going forward is also going to be very different, and we need to be careful about that, as not only as travel retailers, but also I would caution our customers to make sure that they select the right travel provider. And obviously, a big fan of FCM and Corporate Traveller, so obviously that would be us. But yeah, I think that's going to be different.
Yeah, great. Adam?
Yeah, a little bit to Mike's point. I think we shouldn't really underestimate the shock impact that this pandemic has had on us as an industry. And I think we will definitely see, I mean, a lot of people are struggling, and even though they may survive this, they probably won't come out of it in a particularly strong space. So I would expect to see far greater consolidation of the marketplace, especially in corporate. I think if I look at the UK, it's still an incredibly fragmented market, but I just don't see how that's going to be sustainable going forward. So unfortunately, I think size is going to become more and more important, and I think we're very well placed as a global entity to take advantage of that. So there will be opportunities for us. And I think the other thing that's going to really change is, and this has been talked about a lot in the UK and in Europe, around consumer protection. And I think what we've seen here, and back to we discussed in depth around refunds and that situation for consumers, there'll need to be a complete rethink, I believe, of just supply chain finance throughout the industry, and what are the best metrics for being able to provide that protection for our consumers. The Civil Aviation Authority in the UK previously operated a fund, which, to be honest, was completely wiped out with the collapse of Thomas Cook, and so their coffers are particularly empty. I know there's a lot of talk of trying to establish trust accounts for most leisure businesses, which will put a significant demand on working capital for a lot of businesses. But there'll be a lot of debate, and I think definitely in the UK the consumer piece is at the forefront of everyone's thinking here. So I do expect it to be quite a bit of regulatory change in what's already a pretty highly regulated market for us.
Yeah, I think, Adam, you touch on something that's really important there. And, you know, I think when you look at some of the other industries out there who are very highly regulated, or have seen significant regulatory change in the last, you know, let's say decade, governments need to be a little bit careful there, not to stifle the industry, and make sure that, you know, in effect, there's so much regulation on it that it can't grow out of it. And I think that's something where, you know, the likes of major travel agencies, major travel management companies like Flight Centre Travel Group, and, you know, can work with those regulators to really help shape that, so that the industry can flourish, but it doesn't end up, you know, stifling growth, so that we're sitting here in 5 years with, you know, still trying to come out of it.
That's great. So we have received a few questions, so we'll transition into those. So we did touch upon quite a few of the questions that we had during the session, but an additional question that came through is in regards to hotel and plane costs. So do we expect the cost to skyrocket due to reduced capacity, at least in the short term, and the additional spending that the suppliers need to go through to ensure the cleanliness?
Yeah, maybe I'll just jump in first, and then Mike, I might flip it to you, because I think you're seeing something similar off the back of ours. But I'll talk about China as an experience. So in China, when we look at the price of tickets, they were significantly lower than normal to begin with, but we have seen that starting to creep up back to more normal levels as traffic grows. And I think generally most markets will probably see that. There'll be sort of this push to try and get something moving and to attract people to come and want to fly. And then from there, I think we'll start to see that growth. You'll start to see the price of tickets starting to increase and so forth. I think the longer term view is that it's a very, very competitive landscape, especially when you look at when we talk about airlines. So I appreciate that we might be talking about sort of reduced capacity, or we might be talking about increased costs and so forth. But the reality is, I think over the longer term, I think the general supply and demand nature of what happens will probably keep some of that in check. But obviously we're very early days, and we'll have to see where that starts to turn towards.
Yeah, 100%. I think you're right there, Tim. You'll see the airline, they have to stimulate demand. They have to get the customer back and get over this period of anxiety in terms of flying. So you'll see air prices fairly low. But at that being said, based on most airlines' business models is based on volume, and they make very small margins on their flights, and they have to be selling a large amount of seats and volumes and flying their metal 10-12 hours a day in order to make any decent money. So I agree with you. I think we'll probably see it fairly low for a while, and then it'll creep up. In Oz in particular, what will be interesting to see is what happens with Virgin. We only have we have two major airlines, Virgin and Qantas, and Virgin's gone into administration at the moment. And I suspect Virgin will have an investor and come out of this. But if they don't, it'll be a really interesting landscape, with Qantas being the only airline providing travel, or the only major airline providing travel within Australia. So then we'll see prices really skyrocket because they'll have a monopoly. But let's not count our chickens before they hatch. Let's see what happens with Virgin.
Right. And our next question is in regards to travel policy. So are we reviewing our own internal travel policy? And as CFOs, what role may you be playing?
Do you want me to go? Yeah, look, we definitely are reviewing our internal policies, quite closely. As I said, and we touched on before, it's going to be heavy around, duty of care, to start with. But we definitely don't want, our travelers going anywhere that, we don't want them to go, that puts them at risk. Also, whether they don't feel comfortable. But it's going to be heavily customer focused for us, probably to begin with. I think we've all learned pretty quickly that whilst it's not the best, and we do want that human interaction that, Zoom has, or Teams, or whatever you're using at the moment, has been an effective mechanism to still keep in touch, have those business meetings. But we're definitely going to have a customer forward mindset with our travel policy to begin with. So whether that, we have a saying, win, amaze, retain in the corporate business here in the US. So it's definitely around working with our customers, from a retention perspective, working with them to, discuss now, as we've spoken about, on negotiating their rates, right? Working with suppliers, things like that, working very closely with them on their travel policies before we sort of move to internal travel and, having those meetings together.
That's great. So again, that people aspect, I think, continues to prevail. So appreciate everybody's time today. Adam, Mike, Josh, Tim. Hopefully everybody watching along gained some interesting tidbits and insight into everything COVID as it affects the travel industry from a financial perspective. And again, from a people perspective, because we are a people business. So want to make sure everybody is out there traveling safe, or at home safe, because that is the top priority here as we move into the future. So again, thank you everybody who listened along and for submitting questions. We look forward to seeing you on a future In Conversation webinar, and hope everybody stays well. Thank you.
Goodbye. Thanks, guys.
Yeah, thanks.
Yeah.